leadership team at the conference. On my right, Mr. Rana Kapoor, MD and CEO, Rajat Monga, Senior Group President and CFO, J.D. Payyar, Group President, Financial Management, Shubha Rao, Group President and Chief Economist. On my left, Pralay Modul, Senior Group President, Retail and Business Banking, Sanjay Palve, Senior Group President and Senior MD, Corporate Finance, Namita Vikas, Group President, Responsible Banking. In this session, we'll have Mr. Kapoor present the result, followed by the Q&A session. But a small submission, we have slightly, moved away from a traditional, the way we used to conduct this conference. So we will no more have the breakout session for the conference. So hence, I will request all of you to ask all the questions during the Q&A session pertaining to result. And Mr. Kapoor and leadership team at Yes Bank would get all the comprehensive answers to your questions. May I now request Mr. Kapoor to take us through the results. Yes.
Good afternoon, everyone. I would like to welcome members of the media to Yes Bank headquarters. As you can see, there is a change of venue. We are now on the 27th floor of our headquarters, Yes Bank Tower in Lower Parel Innovation District. As you know, the board approved the results a little while ago, and I'd like to share with you, along with our top management team, some of the key developments over the last one quarter for the full year gone by, and invite questions on key issues which we believe are relevant to the banking sector. First and foremost, I'd like to share with you that despite fairly demanding economic conditions, the bank for the quarter gone by produced a net profit growth of 27.4% for the quarter March ended 2016 compared to the previous year. So overall PAT increase of 27.4%, and for the full year our profit has increased to an absolute number of 2,539 crores, which represents an increase of 26.6%, which is in a way one of the best years we have had over the last 3 or 4 years since the credit and the risk precipitation in the economy got accentuated. Within the overall P&L performance, net interest income for the quarter grew by 27.1%, and for the year as a whole, it grew by 30.9% to a level of 4,566 crores. This is as a result of steady growth in advances and far improving CASA contribution, which I will talk about further. As you will also observe, the net interest margin of the bank has improved to a level of 3.4% compared to 3.2% a year ago, which is an improvement of 20 basis points in the last 12 months. And basis current developments, future outlook, we have every reason to believe that NIMs should improve by another 10 to 15 basis points going forward. Non-interest income of the bank grew in this quarter by a level of around 36%, and for the year as a whole, non-interest income was 32.5% higher than the previous year at an absolute level of 2,712 crores. A little bit on the overall productivity and return ratios. For the year 2016, our ROA ended at a level of 1.8%, and return on equity of the bank has improved to an overall level of 21.1%. The book value of the bank share now stands at 327 rupees 80 paisa, which is an improvement of approximately 47 rupees since the last fiscal year ending March 2015, and this is despite the fact that the board, on the recommendation of the management, has approved 100% dividend, literally at the beginning of our 12th year of operations, and we will be distributing about 20% of our profit and retaining 80% therefore, and which is why you see overall significant improvement in the overall book value of the bank. I would also like to add to this that our cost to income ratio, despite very significant investments in branch infrastructure, as I will speak about, additions to our headcount, we have added over 4,200 people over the last 1 year, and almost 1,270 odd people in the last 1 quarter, which is compared to the previous sequential quarter, we had added 777 people. So we are investing greatly in our human resources. We are investing in our branches. The number of branches in this quarter was the highest ever that we have rolled out. As many as 110 branches were activated in the quarter Jan to March 2016. Moving on to some of the balance sheet metrics, I'm very happy to share with you my favorite number, CASA. This is improved overall year on year by 48.7%, and in absolute terms, our CASA now stands at 28.1% compared to 23.1% 1 year ago, which represents an overall increase of 5% in CASA in 1 year's time. Further, in terms of the overall contribution from a granular and from a diversity standpoint, our CASA and retail FD composition has improved quite significantly to a level of now 54.5% as of March 31st, 2016, compared to 47.9% 1 year ago. So basically, retail FDs plus CASA has improved by 6.6% over the last 12 months, and this in itself is a very significant improvement, reflecting on the way Yes Bank's outreach is improved and also its brand presence and brand impact, because retail banking, as you know, has to create a very strong brand pull. So this is a very good development, and we see these numbers sustaining, and I'm very confident that we will get to a CASA of 40%, very ahead of our original target of 2020, possibly even as soon as 2018. Loans and advances this year grew by 30%. 30% fiscal March 16 over March 15, and this is a fairly significant rise, which is also in a way reflecting the underlying growth impulses, which are now in a way getting restored in the bank, having been somewhat more cautious in the preceding couple of years. So overall loan growth has been 30%, and our total loan book stands at 98,210 crores approximately. I'd like to also mention that the sequential growth in loans has been 16.4%. So March over December 2016 over 15, in 1 quarter, our sequential growth has been as much as 16.4%, and this growth is coming from our SME businesses, from our consumer retail businesses, from educational and social infrastructure businesses. So it's a fairly granular and fairly diverse growth, and we are quite certain that we'll be able to maintain growth rates of 27 to 30% as far as advances are concerned going forward. The overall composition of the retail and SME book, which we call business banking, has improved to a level of 34.9% compared to approximately 32% only about a quarter ago, and the corporate composition of the bank's loan book stands now at 65.1%. I'd like to also add that our overall deposit growth this quarter has been fairly satisfactory at an overall level of 10.1% sequentially and overall 22.5% year on year. So these are the key balance sheet data points. Capital adequacy of the bank now stands at a level of 16.5% and core tier 1 is at an overall level of 10.7%. I'm pleased to share with you that in this quarter we raised 1,845 crores of Basel III compliant tier 2 bonds, and for the year as a whole we have raised 3,900 crores of tier 2 Basel III compliant bonds, which is ensuring that we maintain a fairly satisfactory overall CAPAT ratio at now a level of 16.5%. The total assets of the bank now stand at a level of 1,65,000 crores, having grown 21.4% year on year. So we are, ladies and gentlemen, now a small, large bank, having crossed the 1,50,000 crore total asset mark in this particular quarter. I'm very happy to share that we're entering into the large league, but still the smallest large bank in that category. To move on to what has been top of mind, asset quality. Once again, as I reported to you on January 29th for the last quarter, overall there has been preservation of asset quality despite the overall heightened risk environment across the banking sector. The credit cost of the bank, as I reported to you last quarter, has been contained for the year as a whole to only 50 basis points, and for the quarter was 16 basis points vis-a-vis the preceding quarter when credit cost was 14 basis points. As you will recall, some of you are fairly regular with our bank, that at the beginning of the year, fiscal 15-16, we had given a credit cost guidance, ladies and gentlemen, to you of 60 to 80 basis points. In the middle of the year, based on at least 2 quarters behind us and with the AQR underway at that point in time, we had revised the credit cost guidance to 50 to 70 basis points. And then, as I reported to you in January, we have been able to contain credit costs. This is the most important number because to us, this is where, the sigma of all our credit actions, of all the asset quality measures and metrics get captured. So this has been, in a way, contained at 50 basis points. The gross NPAs of the bank are at a level of 0.76%, and the absolute number underlying that is 749 crores. The net NPAs of the bank are still in the 20s, 0.29%, with an absolute number of approximately 285 crores, with an overall provisioning coverage of over 62% as of 31st of the AQR impact. Our credit costs have been contained, and our GNPA, net NPA provisioning coverage is amongst the best, even when compared to the perceived retail private banks. And I take pride, institutional pride, along with my management team, to share that we are continuing and making sure that credit costs are controlled in a fairly vitiated background over the last 12 to 24 months. The other 2 important numbers I would like to add to you to this presentation is that our restructured book has come down to a level of 0.53%, and the underlying amount there is 524 crores as of March 31st, 2016, and this has come down from 0.67% as of December 31st, 2015. So 0.67 has come down to a level of 0.53 in the last 1 quarter, and this is a very good signal that there is some overall improvement taking place even in the restructured book, because we're looking at all the components of asset quality threadbare. Security receipts, which is another asset quality measure, has come down. That portfolio has come down to 0.22% compared to 0.25% in December 2015. So in one quarter, it's come down from 0.25 to 0.2%, and in absolute terms, from 212 crores to 199 crores during this quarter. As in the past 3 quarters, there has been no SDR in the March quarter, and we have had no refinancing under 5/25 in the quarter ended. So in all, we believe, given the market circumstances, Yes Bank has demonstrated, not just over this last 1 quarter, last 1 year, as most of you know, that the global crisis which started in March 2008, so 8 years ago, right, 32 quarters ago, right, has resulted in our bank, in a way, proving quarter on quarter sequentially that overall asset quality has been preserved despite headwinds, exogenous and domestic. So this is a very important part of my presentation to you. Apart from that, I'd like to add a few other aspects of asset quality. As you know, on sensitive sectors, which is an area that we look at very carefully, as you know, there are 2 or 3 sensitive sectors. The electricity sector, which is showing improvement with fairly good policy reforms. In March, our exposure to the electricity sector improved from 9.1% to 8.7%, and within that, we have a fairly high component of 2.5% of renewable energy assets, which are substantially operational. 2.1% or 2.5% are operational renewable energy assets, and non-renewable stand at 3.6%, which are all operational assets. Moving on, iron and steel, which is a sector where again there is some government relief forthcoming. I'm happy to share with you that our exposure in the last 1 quarter has come down from 3.2% to a level of 2.2%, of which 1.4% is A or better rated. The third sector, which is also showing underlying improvement because of the improvement in the underlying infrastructure and adjacent sectors, which is the EPC sector, there our exposure stands at 6%, of which 4% is A or better rated. I'd like to add that the rating profile of the bank indicates that our corporate exposures, over 75% are rated A or better. The capital position of the bank, as I mentioned to you, stands at a CAPAT of 16.5%, and 10.7% is the core tier 1. In absolute terms, the capital funds are at a level of 14,269 crores, and this is the tier 1 capital of the bank, and total capital funds now stand at 21,874 crores. The liquidity coverage ratio, as you know, the Reserve Bank of India norm is at 70%, so we are fairly above the regulatory monthly average liquidity coverage ratio, which on an average basis is at a level of 83.9% for the quarter gone by, compared to a requirement of around 70%. I'd like to add a few more comments because digitized banking and Yes Bank is part of our DNA, and some of the initiatives that we are taking up are bearing fruit. You should know that we were amongst the first ones to sign up with NPCI on the Unified Payments Interface and have established an early mover advantage in working towards a cashless economy, and are making significant breakthroughs as far as e-commerce companies are concerned, wallets, insurance sector, asset management company payments are concerned, as well as retailers. The Yes Money program is one of the largest domestic remittance programs, now encompassing over 4.6 million customers and with a cumulative transactional flow of about 12,000 crores, of which 4,000 crores transpired only in the year gone by. Over 1.6 million Yes Bank co-branded virtual cards have been issued since inception, which is one of the largest virtual prepaid programs now in the world, in which we are partnering with MasterCard. 27 million Yes Bank powered free charge wallets have been issued since its launch very recently, only in September 2015. And I'd like to add that we are amongst the top 5 banks in terms of IMPS transaction, contributing over 5% of IMPS transactions in the country today. There are a few more of our achievements in the digitized banking space, which are incorporated in the media release shared with you. On social media, as you know, we have been making rapid strides, and it's a matter of not pride only at Yes Bank, but national pride in some respects, that the financial brand in 2016 has now been, which has been following the Yes Bank, has ranked us as the fastest growing bank in the world on Twitter, with a following now, active following, exceeding 9 lakh interfaces. This is the highest as well, based on Brand India data on Instagram, where we have now 1.3 plus followers, and on LinkedIn we are just about short of a lakh at about 99,000. This is on the Yes SME, which is also one of the most active portals on LinkedIn, and showing very, very good growth data points, because SME and SMEs is a very, very key focus segment for retail banking under Pralay's leadership. So we are making sure that we are building direct contact with SMEs through social media, very efficient and highly communicated channels. Headcount, round number of 15,000 people as of 31st of March 2016, our most important and valuable asset, but equally the average age of Yes Bankers, 15,000 of them, is only 31 years. So this is a very high octane, positive energy bank, as I'm sure you know. And the number of employees, sorry I said 12, is 1,523 employees who have been added in the last 1 quarter. And overall 4,190 executives over the last 12 months gone by, with 110 branches added in the last 1 quarter. We stand now at 860 branches. Overall ATM network of 1,609, including DNAs of 110. Capital raising, we have a valid approval till early June of $1 billion. Today the board has approved extension and Goldman Sachs Women program, which is a matter of great pride as an Indian institution, that they chose Yes Bank to, in a way, distribute this program. I'd like to also add that in this quarter, on Women's Day, we launched 3 branches, Yes Grades branches, all in a way equipped to render to women banking requirements and fully operated exclusively by women staff. These were launched in 3 locations in Mumbai, in Bangalore, Bengaluru, and in New Delhi. And we will be increasing these branches in course of time. First currency chest established. Yes Bank's API Innovation Award was a matter of significant pride. 8th year in a row, we got recognition from KPMG and Business Today as the best size mid-sized bank, and I hope it becomes large size next time, on quality of assets as well as on growth. And the Banker magazine ranked us as the #1 bank in India for the year 2015. Plus, on brand recall, we leapfrogged in the global ranking by 118 ranks, which is the 4th highest leap forward for the brand as a whole on a global ranking basis. With this, ladies and gentlemen, this has been fairly exhaustive and lengthy, but last 1 year has been very demanding, so I wanted to share the good news with you, and I and my management team will receive questions from you.
Good afternoon, Mr. Kapoor.